Hi, this is Chris Oakley with the Oak Trader Report Part 1. It's the 25th of August 2013, and I thought today, just in Part 1, we'd cover some of the indexes around the world and just see how they're behaving. It's quite an important moment, I feel, over the next couple of months for the Dow. In America, the American stock market looks like it's going to be entering a period of volatility the next 2 or 3 months. And I thought members would be interested just to see how other markets, indexes around the world have been behaving. The AEX in Amsterdam, as you can see here, it reached a peak up in 2001 and it's been in a slow downtrend ever since then. It seems to be rising up here where my mouse is in 2010, and we are seeing a lot of reports and negativity about the Dutch economy at the moment. Which is always quite a good sign if you're a contrarian. And also I'd add as well that Amsterdam is home to numerous global companies. So even if the Dutch market, the economy isn't doing too well, there's been a housing bubble, they're suffering at the moment over there in Holland, the people of the lower income brackets, whereas the middle class and the what you would call the upper class are still doing quite well. But in terms of Amsterdam being a global city, it truly is. So there's companies there that make their money internationally, and I'll show you a couple of indexes later on what I mean by this point. But I would look at the Amsterdam index here, the AEX, and I can see here a bit of a flat top triangle developing. If you look where my mouse is, you draw a line along there and a line along the top. Sometimes we do see a shakeout from that. But I would say the odds are definitely in favour of this market moving higher over the next year. The composite index in Jakarta, as you can see, it's been on a bull market run for quite a long time here. We're looking at about 8 to 9 years movement upwards, a nice break there in 2009, and it's steadily moved upwards. It really hasn't come off at all, considering a lot of the companies in Jakarta listed are mining companies, and a lot of the economy is to do with commodities. And since 2011, really mid-2011, we've seen a sell-off in commodities. So it's surprising this index hasn't come down, and it still looks to be really quite stable where it is. So perhaps this market we could see consolidation, but from here I wouldn't be going long at these levels. As you can see, from 2003 onwards, really, I mean, it's up well over 600–700%. So I'd be taking a back seat with this and just watching the market and see how things develop. The Sensex in India, I think it's India's top 30 companies. There's only 30 companies included in the S&P Sensex index. And it's been making the news recently. India, it's not been doing too well the last couple of years. But as you can see, the biggest Indian companies look like they've been doing okay by what this index is saying to me. And we can see here where my mouse is the beginnings of a flat top. But I would like to see more development here and more consolidation. And as we know, the US dollar has been rocketing up against the Indian rupiah. So that's made Indian stocks quite attractive. Sometimes the opposite, when a currency loses value, their stocks on their stock market go up. And it can work the other way around when things are dire. So I would say it's a hold here for the Indian market, and we could see a move back down to 16,000. But long term, it is looking extremely positive. All India really has to do is make a few tweaks to its own economy, and they should see some large inflows of capital over the next years or two into their markets. The Bovespa in Brazil, as you can see here, one of the reasons I don't trust indexes. The S&P in America, the 500, is probably the most trustworthy index in terms of how it's made up, in terms of its rules. Whereas the Bovespa, you can see here, it's gone up massively, and it's from 10,000 to 50,000, and it looks like it's consolidating here. But this chart is highly magnifying out. If you were to zoom in, you would see extreme volatility, and I would previously mentioned in the Oak Trader report that I see this market maybe heading down a bit further, and it could develop into a Japanese style downtrend unless Brazil really puts in some reforms and adjusts the way it operates. But long term, it's got a great future, Brazil, and it would be a country that I would look at longer term. And there are some great looking stocks on the Boa Vispa individually. It's just that the index as a whole does not look attractive at the moment. The Buenos Aires market, the Marvel in Argentina, I just wanted to put this chart up here just to show you why it's absolutely useless reading the papers. Let me just flick back to it now. Oh, I just lost myself. I'll just get it back. Here it is. As you can see here, it reached a low roughly around 2002, and from there, if you draw a line here, it broke its downtrend around 2003, and it's been moving up. And we all know that the Kirchners, the lady that's in charge of Argentina that took over from her husband, hasn't been running the economy well. It's all been about theft of private assets and currency regulations and restrictions, and really a crackdown and a noose around entrepreneurs' necks. But it just goes to show that reading too much sometimes can stop you making money. From 500, the market went all the way up to 3,500 if you counted in when you bought when the downtrend was broken. And this was all throughout a period where you've had the Great Recession in America, the European banking crisis, numerous issues around the world. And then you look at the Argentinian economy. I mean, it's something that George Orwell and Stalin probably would have thought out on a night out, thought up. So you can see that necessarily reading about something doesn't necessarily give you the answers, and I think the Argentinian index here over the last 10 years proves that. The TSX Composite Index in Toronto, you can see here the big come down in the recession of 2008, and you can see it's built up a nice consolidation area, building a nice consolidation. If you draw a line along here, it looks to be developing a flat top, although this isn't a very long period. So when it's not a long period, you can't hold much confidence in it, and a lot more moves come out of periods of formations that don't last that long, or the opposite way as one would suspect it would go. So you have to be really careful if it's a short-term formation, but it has broken a downtrend here, and it's still roughly in an uptrend here, but I wouldn't be confident about this short term, but longer term it looks okay, and I wouldn't be trading the index at the moment. Maybe some individual stocks on the TSX, but definitely not the index. But it does look pretty good. If you have to invest in Canadian stocks, then the TSX, it does have some good companies listed on there. The IPC in Mexico, as you can see, it's just been on a straight up bull market run, and again I wanted to upload this about fundamentals and reading too much news. This is when the drug war started in 2000, or maybe perhaps if you wanted to say 1995, and if you'd have read the newspapers about Mexico and never learned anything at all about the country apart from what you read in the newspapers and saw on the news, you would not have invested in the country, and you'd have missed out on a tremendous rise in the index. So it just goes to show again, just like Argentina, you know, you have to go off price action rather than what's actually in the news, and also you have to be extremely careful of going along with mainstream opinion. The composite index Shanghai, I really like this market at the moment. I'm looking at individual stocks in China. They'll be on the watch list in the next couple of days, and you can see here the downtrend. Once that breaks the downtrend, I'll start buying into the index, the ETFs as well, and you can see here that it has broken an uptrend here, and that's why I'm still a bit cautious, because this could, who knows what type of surprise is going to come. It could turn into a significant downtrend, but my feeling is it's flattening out, and over the next year we will see the Shanghai market moving upwards, and it will be the opportunity perhaps of the century to get in there and to buy at these low levels. There are some great looking companies in China, that have been beaten down over the last couple of years, simply some of them by association, just simply from being Chinese. Since Carson Block, I think his name, the short seller, has come out, and also other scandals as well concerning Chinese listed companies in Canada and America. A lot of people have been very wary of Chinese companies, but there is tremendous value over there at the moment, and I'm seeing a lot of great looking individual stocks, and the index is shaping up very nicely. So I'll be keeping some money aside for the back end of this year and next year to invest in the Shanghai index to try and play this move as it goes up as well. The Nikkei 225 over in Japan, huge downtrend here from 1990, and perhaps you could say it's flattening out and the market will recover, and it has been recovering, but unfortunately it's not been a natural recovery. It's been intervention from the Japanese government, and again they're playing games just like the Americans, the British, the Chinese have done over the last 3 or 4 years. So really it's unknown territory here, and I wouldn't trust this rise in the index much more than perhaps another spike, and I think that would be the end of that move, and you may come down and see another consolidation period roughly where my mouse is. But it does look like it's curving around, and a couple of years ago I did take some very good positions on stocks listed in Japan, and if you look at those companies, there were some very good flat lines that went on for 8 to 10 years in Japanese listed stocks, and they've all had good rises in the last 6 or 7 months. But in the next couple of months I will be looking to sell out of these particular markets in Japan, I think, because whenever something is unnatural, it's perhaps unsustainable. So I'd be very careful from here on in. The market over in Switzerland, the SMI, I just wanted to put on this because the currency intervention back in 2011, there was some wild swings in the Swiss franc, and as you can see here, the market has gone up since the Swiss Central Bank intervened in the market, and I think, you know, from here perhaps we'll see the market curve around and hold steady. It does look to be quite a large consolidation area. Not much area time spent in low areas, but it does look to be developing into somewhat of a consolidation area, a base. But again, I wouldn't have any confidence in going long the index at this particular juncture, and I don't have any opinion either way really, long or short. Right, the interest rate 10-year T-note on the CBOE. You can see here we've been in a huge bear market for a number of years. Really, as the stock market turned around in 1982, we've seen the stock market go up and we've seen bonds go down. And we are looking at the Dow now being in its fourth, entering perhaps its fifth stage of its bull market since 2009. So perhaps this is a good area to go long, but if you see here, we're definitely still in a downtrend, but it's an area here where maybe you'll kick yourself in 4 or 5 years and wish you'd have bought here. I know everyone's been trying to call the bottom of this market. Lots of people have called the bottom and got it wrong, but nothing goes down forever. The wind never blows in the same direction forever, and trends and cycles change, and this has been a super trend, and it just correlates really with the stock market at the moment and the loose monetary policies that have existed. And we can see here that once it kind of breaks 4 in the future, that's when we should see a sustained period of upward movement in prices. But definitely at these low levels, this could be an area where you look back in 3 or 4 years and think to yourself, why wasn't I buying into bonds at these prices? And here's the Dow Jones. You can see here from 2009, the low in March. If we call this one segment of the bull market here, it consolidates where my mouse is. One segment of the bull market, it consolidates and shakes out. And then we have another segment, and that's 3, consolidates, and then we have another segment, that's 4. Usually bull markets don't last much more than 4 segments. We could see a fifth one. We're not seeing huge volatility here at the moment, but perhaps the volatility will increase, but perhaps that's to do with the number of participants being in the market with margined accounts. It's not like it was back in 2007, just like the market in 1932 wasn't like the market in 1929. There's a lot less gamblers in the market, and there's a hell of a lot of professionals loaded up in stocks, and that's why I can't really see longer term the market crashing, so to speak, but perhaps we could see a huge shakeout, maybe to 13.5 at some point, and then it would reconsolidate from there. But I mean, it does look like the fourth stage of a bull market, but then again, there's a lot of individual stocks in the American market that do look good. And it has been like that before in history, where individual stocks can do well and the stock market can do badly, and perhaps we're entering a period where that will be so. But it looks here as if it is entering a consolidation period. I wouldn't be surprised to see it maybe in the next couple of weeks try and trick people short and then move back up to the 15.5, maybe touch a new high, and then perhaps we could see a large sell-off down to 13.5. But if you were long the indexes at the moment, I would consider moving moving some funds out of the market, and definitely being extremely cautious here at this present moment. And also, if you've got stocks that are showing very decent percentage gains over the last 3 or 4 years, don't be greedy, sell out. Look for some other stocks that are making decent flat lines and moving up gradually and breaking out of gradual downtrends, and reinvest your money into something that can grow. And just to show you the monthly chart on the Dow Jones, it's gone up from 6,005 to 15.5, and it looks here that we're entering a period of volatility. As I said, on the weekly, and you can clearly see the segments here: 1, 2, 3, 4. And these money-induced rallies, you can see the rallies that we had back here. This one was a sharp one back in 2003-4, but you know, this was gradual and steady, and we still sold off. This move has been a lot more violent upwards. So when it does eventually turn around, I believe we will see a lot of violence on the downside. Usually that's the case. The more aggressively the market goes up, the harder it drops. Just like with parabolic moves up, you see massive spikes down in general. Okay, moving on to just commodities here, just briefly. Crude oil weekly chart, 5-year. It looks to me perhaps a weekly bear flag here. We could see the market spiking up to around 115 to 120, maybe using the Syrian, the Egyptian, or a multitude of different props they use to push prices up. But I believe that the market longer term will turn around and move back down, and I'll show you on a monthly chart just after this chart. But it does look short term. Perhaps in the next 2 or 3 weeks you might touch 120, and then that maybe will get people excited enough for the professionals to unload their positions onto them, and that's maybe when we could see the move down. But it definitely looks short term higher from here. But again, I really don't trade commodities that much. I try to stick to the longer term stocks, but I will trade a small proportion of my portfolio in commodities, simply probably because I'm addicted. It doesn't really make much sense. I'd much prefer to keep my money in stocks that are moving up, or currencies that are making good formations. Commodities that are making good formations I'm happy to buy as well, but the shorter term trading, it's very hard to hit on the nail. And as you can see, the crude oil monthly had a huge rise up from 1999, massive spike up as we're talking about in the last slide, and a huge spike down. And I feel these spikes up here, they look like distribution to me rather than an accumulation, although I would say this 4 to 5 week period here, we did see some professional buying, and that's why I think it's going to go to maybe 120, and then from 120 I think we'll slide down. And if you see where my mouse is in 1999, you draw a line, 2002, and then again in 2009 it hits the trend line, and if you draw the mouse along, we could probably see it maybe touch around 60, and it would settle down about 60. So that's the longer term prediction with crude oil. And I just wanted to show you the international price, the crude oil Brent. That's looking again like it's kind of rolling a little bit over here. This looks to be quite positive, the upward movement where my mouse is, and then the movement where it comes down. I often see it rise higher from there, and this does look like to be a consolidation area that will break out. But again, I don't think it will touch the 125 high. I think maybe around the 123, and it will roll over and make its way down. Again, if you look at the long-term trend line, it's somewhere around the $70, about $10 higher than the American Cushing price. Russell 2000, smaller companies in America. I just wanted to have a quick look at those. As you can see, it's been in a rip-roaring bull market as well. Just when all the papers were negative and they were telling you not to buy in, individual stocks were looking quite attractive on the Russell. But if you see here, the market has spiked up quite aggressively, and it does look to be approaching highs. We could see a 1,100, but I wouldn't be going long this market, and I'd wait for volatility here. And if I was prone to short the market, take a gamble, I definitely would say that the probabilities would be in your favour for the market to at least come down to around the 850 level over the next 6-month period. Okay, corn monthly, just showing you the huge spike down in the monthly price here. What we were talking about before, conforming to the long-term trend eventually. You see where my mouse is in 2006, and then you run the trend line along, and you can see where it's just touching it there. And I expect to see it consolidate around the 400 to 500 level, and decide from there. Whether it builds a new base for a further move upwards is for the future to decide. What Gann used to talk about was new cycles and new highs. You can see here the 300 point and the 400 point is the new area of the lows. So Gann used to call it the highs become the lows, the old highs become the lows. So if you see at the highs of 350 and 550, but roughly the average of around 300, you can see where you had big support here. So maybe we could even see the price coming all the way down to 350, 300. But again, the old highs roughly along here is 300. So we could see the market coming back down to there, and that's over the next 15-20 period. We'll probably see a range in corn of 300 to 800, just like we saw in this period here, a range from 250 to 200. And that's what markets generally tend to do. They tend to take a step up in price every 20 to 25 years. If you look at long-term monthly charts, you can see that quite clearly. Here's the VIX. You can see here quite clearly downward trend broken, and then a downward trend broken. Each successive spike up is less, and the market supposedly is becoming calmer and calmer. You can see where my mouse is here at the early part of 2012. You can see the market curving around, and I see the market perhaps consolidating in this area. It could consolidate perhaps for another year. Sometimes we, the public, we're far too impatient. Sometimes moves take a hell of a long time to play out, and they do take time sometimes, and other times they happen in a very short space of time. But it could take another year for this to spike upwards. In terms of the Dow coming down in price, it may take a year, it may take 6 months, but it definitely looks like a position where you have to consider that as the general of your portfolio. You have to consider that the Dow is extremely high, the VIX is extremely quiet at the moment, and it looks to be like it's a good idea in terms of swapping positions, moving out of some of the stocks more into defensive positions at this present time. Sugar 11, huge downtrend really. It's beginning part of the commodity bust. For a lot of commodities, sugar was an early performer, and it had some good moves up. And we can see here it's been in a solid downtrend since 2011, and it did break that downtrend here. And I think it's far too early to start buying into this market, but some of my members do have excessive amounts of spare cash available, and if they wanted to trade commodities, then this, I believe, will be a low area, and I believe the market will curve here. In terms of confidence, not hugely confident of that happening, but you can see the downtrends being broken here. We may have a small shakeout to neg people out and try and get them short here, but I think it will consolidate around the 16 to 18 level and then develop into a new move upwards. But definitely the downtrend, as you can see here, the contracts are being absorbed and some very strong hands are holding up the market. Whether they can hold it and move the market higher, that is for the future to decide. Again, just to show you on the monthly, and you can see here, huge downtrend. Here's the long-term trend. It's roughly near the long-term trend. We could see it maybe, as I said before, touch below it, but about here is the long-term trend, and again it looks to be the high here in 1995. The old high becomes the new lows, just as Gann said. Sugar 16, again huge downtrend here on the monthly, and it's broken, and you've just seen 1 or 2 months outside of that. We might have a spike up to 22, but I suspect it will consolidate a little bit around the 20, 22 area for the next couple of months at least. And as I said, it's far too early to buy, but definitely it's on the watch list and looking for a new base to develop to go long at some point in the future. But the downtrend has been broken and it's one to watch. Okay, part 2 will be uploaded in the next 30 to 40 minutes, and then part 3 after that, and part 4. Thanks for listening, and I'll speak to you soon. Bye.